Hello everyone and welcome to the channel. My name is Brent, and in today's video we're going to go ahead and quickly go over this week as far as the market volatility between the 19th and 21st of July 2021. We're also going to go ahead and cover what stocks we have recently purchased within our M1 Finance account and our MERRILL Edge account. And then we're going to go ahead and cover some of our current options that we initiated this week. And then we'll go over our current plan going into the remainder of July and August of 2021. So if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. We cover making money, saving money, and investing money. So let's go ahead and get into the video. Taking a look at this week so far. So Monday, Tuesday, one of the biggest dips and the biggest recovery side by side here of 2021. So I want to go ahead and focus on the Dow Jones. On the Dow Jones, we had a massive downswing from open. It was down some 400 points in the early hours, and then during the day, it actually dropped to over 800 points into the negative before picking it back up towards the end and closing down 726 points. Now on Tuesday, it didn't quite recover all of its losses, but it did have a very nice gain of 1.62% before Wednesday completely recovering all of Monday's losses overall. We're still not up to last week's highs, but here we are trading just a few points, 700 points off of all-time highs. So really not a bad area to be at the moment. We can see that the Dow Jones is up 13.69%, which is actually in second place when compared to the NASDAQ, up 13.53. The NASDAQ has been on a bit of a beat up area recently. I think it had like 4 or 5 consecutive down days before, picking it back up on Tuesday and Wednesday. But it is in third place out of the main 3 indexes, where first place right now goes to the S&P 500, up 16.04%. So very nice there overall. Now let's go ahead and cover some of the stocks that we recently purchased this week within our M1 Finance account. And we'll go ahead and cover M1 Finance overall at the moment. So overall, we're doing pretty positive in this portfolio. If we take a look at the 1 week performance, we can barely see that blip there on Monday here. We went from 35 basically $700 to $400. So we lost around $300 on that dip, not a big dip. And then we quickly recovered it and then some on Tuesday. So, and then continuing on to Wednesday, just continuing to climb and climb. So if you are an investor who gets emotional about their portfolio, you may want to reconsider what you're investing into. If you're not willing to buy when it's a red day, or maybe you just are kind of sitting on the sidelines. I know I'm not really sitting too much on the sidelines as much as I had been. I've been slowly dollar cost averaging more liquid, more capital into the markets versus staying on the sidelines. So we'll go ahead and cover some of that, how we've been investing, more recently versus not. But that's in here in just the future as we cover MERRILL Edge. So overall, we've done pretty well as far as the portfolio. Quickly took a hit there, quickly recovered. And we did release one video on Monday, just a really quick video from my phone. It was late, some 1 or 2 in the morning. I was already in bed, but I wanted to make a Monday morning video because I saw stock futures already negative. I had posted it over on Instagram. The news outlets were already talking about how futures were down 400 points already prior to me going to bed. So I knew that it was going to be pretty negative. So I went ahead and just initiated a couple buys on M1 Finance and over on MERRILL Edge. And if we take a look here, we did have $56 in dividends. We covered that portion, and then we made our deposit on Friday of $201.42. So on Monday, we purchased $257 of Merck, and it hasn't been doing amazing lately, but that's completely fine. If we take a look down towards the bottom, Merck has actually been pulling back slightly, so it is down 3.19%. But a lot of these positions down towards the lower spectrum of the portfolio, such as Methode, Innovative, Siggy, Colgate, Hormel Foods, Merck, and Clorox. These are all positions that we added into our portfolio recently. This is not correct. For example, I deposited $2,000 into Clorox. It's down $74. That is not a loss of 21.83. So M1 Finance is being funky with me here. But these positions are all fairly new. The only position that's down here that's been long-standing is Altria and Simon Property Group. And Altria, that'll be removed from my portfolio soon here in the future. Simon Property Group, that'll probably more than likely get removed as well. But at the moment, I'm just kind of letting it sit there and recover. Before I can't tax loss harvest anything. So if I sell anything for a loss, I won't actually be able to write it off on my taxes. So I just kind of let it sit there. It's going to perform over time and recover. And I don't need the capital to invest into other companies at the moment. But if there is a position that I believe has quite a bit more upside potential, such as Waco Group, I know on my Merrill Edge account, I sold out of Waco down $100, but I quickly bought into, Abbott Laboratories or something else that I'd purchased. Then it quickly recovered off their lows. So when there's opportunity out there, I definitely jump at it. But right now, I'm just kind of letting that one sit. Everything else, it's kind of brewing. So this portfolio up very nicely. We already kind of discussed our dividends and the stock purchase there of Merck. Jumping over into Merrill Edge, we only made one buy. As far as stocks go, we can see here that it's flagged here as a fairly recent position. Not the position overall, but we did buy 36 more shares of First Horizon Corporation. It was down to $15.05. So I went ahead and initiated a $500 market buy of that one to buy me 36 more shares. I was able to lower my cost basis, increase my overall yield on costs and my future dividends from this company. It is down still 4.93%, but Tuesday during the recovery, it was up some 4%. Today on Wednesday, it is up another 2%. And I wrote a covered call on this one for $18. I was able to pick up $5 on premium. That price hasn't changed since then. So if it goes up to $18 by the 20th, my stock will be assigned at $18. I bought it at $15 and some change is my average cost for that one. So I'll make some capital appreciation along the way while also collecting the premium there as well. So no biggie on that one. I'm going to hold that one, writing some covered calls on it and collecting the capital appreciation from that position. We didn't actually buy anything else, and nothing else was really purchased in here. As far as options go, we did do 2 calls on Tattooed Chef. So we do own 200 shares of Tattooed Chef. It was down in $18 or $19 range. So we actually shot kind of lower this time at $22.50 versus the $25 covered call. This one we were able to collect, I believe, $60 per bundle. So we sold 2 of them. So I believe we were able to collect about $110 for that covered call. I'm just kind of letting that one sit. My current cost basis on Tattooed Chef is $16.50. So we're up 21% at the moment. If it does go up to $22.50, we'll collect the capital appreciation until then. Still collect the premium. We've wrote covered calls on this one multiple times now, so we've collected a little over $200 to $300 on this one so far, just in premiums alone. And VTI, we wrote 2 covered calls on VTI. I continue to shoot for 225. I should have actually shot a little bit higher just because I didn't believe the market would have recovered as fast as it did. But VTI has recovered. It is currently priced at 225.02. This covered call doesn't expire until the 20th of August. So, this covered call, 20 August. And at 225. So if it does stay above 225, my options will be assigned and I'll have to sell out of those 200 positions. I'll still get capital appreciation. I think my initial cost, my unit cost on that position is around 220 or so. So I'll still sell all of my shares, anywhere gaining $5 for the 2. So that's about $1,000 on capital appreciations. And then I made about $600 on the covered calls. So I'll make a total of about $1,600 to $2,000, just kind of depending on where it ends. So we were able to sell a put for $210. We picked up, this isn't correct here. The premium's gone down now, but I think we were able to collect some $230 for selling that put on Monday. And on Tuesday or Wednesday. I think it was today during the day. It was really cheap to buy it back, so I was able to collect $230 on the premium, somewhere around there, $230, $260 by selling it. And then today I purchased it back for $115. So I kept the difference there of $128. That was the difference. So I was paid to sell the put to somebody, and then I purchased it back and I collected the difference there. So that was $128.69 of the difference between selling it and then be able to buy it back. And then I was able to write another covered put for $215, and I was able to collect, I think it was $130, $135, somewhere in that range on the premium. So overall, I've made about $260 selling puts on VTI just within the last 3 days. And I don't know if it'll actually drop down to $215. I don't know if it'll stay around $225. I think we're in a pretty good range right now where we have a lot of volatility in the market. So the market could go either way. If it moves over 225, I will sell. I'll just kind of rebuy my shares again over, under 225 and continue to do that. If it falls down to 215, my cost basis is around 220. So I'll just lower my cost basis. I'll pick up another 100 shares to do some more covered calls. And I think I still have more capital on the side. So I could continue to do more puts if I want, just do another put overall. But we'll go ahead and continue to do different option plays there with using DTI. So that is pretty much everything that I've done within this portfolio recently. So as far as, what our current plan is going in for the remainder of July and going into August, as far as M1 Finance, we're continuing to dollar cost average every single Friday. We're adding that $201.42 up until December. And we're funding the rest of this thing out. So we're only at nearly $1,400. So we have another $4,700 to deposit for the remainder of 2021. So we have quite a bit to go on this portfolio. If there is a bit of a correction where this portfolio or the market loses anywhere from, say, 10 or 15, 20%, then I will more than likely do another larger deposit, such as we did back in March of 20 when it dipped. We added 3,000 or 4,000 directly into the Roth IRA and quickly funded it that way. But for right now, as we are trading near all-time highs, I'm just depositing it slowly and dollar cost averaging. Inside of our Merrill Edge account, we're not going to be adding any more capital into our taxable account. We funded it with $100,000. I am going to put $6,000 into my Roth IRA. I still haven't decided when I'm going to do that. I should just do it and just get it over with, just kind of deposit it there just to have it available. But that's pretty much it. I'm looking for other positions to do some covered calls that, I looked at Palantir and, I think that one actually has quite a bit of good upside. It does have some options that you're able to run on it as well. But I've been kind of looking at a good number of a few, in the smaller mid-cap range. So I'll go ahead and make a video going over positions that I am looking at. I just haven't made any sort of moves on recently. So let me know down in the comment section below, are you invested in any smaller mid-cap companies? Let me know down in the comment section below which ones you're taking a look at, if you're running any options, and what your current plan is here for July and August of 2021. The market's kind of teeter-tottering. We can see here, what the main thing is that's on the headlines that's kind of, has investors on the sidelines kind of guessing. I don't mind, I don't care what the market does here in the short term. We still have quite a while until we're really going to be using our Roth IRA or portfolios anyways. So, whatever happens here in the short term happens in the short term. And over the long term, it just looks like a small little blip that never, I guess that's not a really small little blip there, but over the long term, if you could extend this over the long term, those would all kind of really even out, where you would very rarely see these dips here along the way. But it's completely normal for the markets to have corrections. Within a year, we'll have anywhere from 2 to 3 corrections. Here in 2021, we really haven't had any sort of corrections within the last year. So back in 2020, we had that little correction and a little correction, but really Towards the end of the year, we had some nice ones, and then throughout 2021, we really haven't had anything. We've had a couple double bottoms, but here we are continuing to move higher. So just kind of interesting just to watch. That's all that I am doing, is watching what the markets do, continuing to invest, and being invested for the long term. So that is going to be it for this video. Let me know down in the comment section below, what are you currently doing in this market? Are you continuing to buy? Are you holding? Are you selling? Let me know down in the comment section below. If you are buying something, let me know what you're buying. I'll take a look at it as well. I haven't been picking up a whole lot. I've just been sticking with the ones that I have gotten into here recently and averaging in and doing some option plays as well. So that is going to be it for this video. Again, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye-bye.